Kush, Bohra, very good morning. Parag Thakkar, very good morning. Great to speak with you as always. Kush, let's take a look at how you're looking at the indices first.
But before that, Asia Cup, India, Pakistan, we have to talk about it. No matter how insignificant it turned out to be and how simple it turned out to be. So when you beat an opponent on their own field or a field of their choosing, I mean, you own the game, right? So, and India has been doing that. I don't think we expected anything else. Couple more matches, I think more excitement on the cards. But yes, I mean, that was an important update, at least from my perspective, to bring up. But, talking of field and, the battlefield, 8 sessions of consecutive gains. I think this is a battlefield where, we could say the Bulls can say they've won the game, at least for now. And this comes on the back of FIIs covering their shorts, something that we've been speaking for a while now. And mind you, this is only 5% short that they've covered, about 7.5%. From there, they've gone to a long, index long ratio of about 12%. 500 points gained on the Nifty, about 1,000 on the Bank Nifty. Imagine if this accelerates, I think the short covering rally itself will perhaps be enough to take the indices to new highs. But as of now, the other thing that's happened is the PCR, the only fly in the ointment, as we often refer it here, is the PCR that's gone to 1.29, which is slightly overheated. So any kind of a pullback should actually be taken as an opportunity to go long. 28 points down on the gift Nifty, even if that, slides to, let's say, another 30, 35 points, even a 75-point cut, I think that should be a safe entry point from a risk-reward perspective. The comfort also comes from the fact that the put base has been shifting higher practically every day. So from 24,800, 24,900 to 25,000. In fact, 25,100 put also has seen a fair degree of activity, suggesting that there is enough and more support on the downside. So yes, if we do get this minor, gap down, I can't even call it a gap down, but a muted start, and if it slides further down, I think I'll take that as an opportunity to go long on the Nifty.
Okay. So go long on the Nifty despite the PCR, simply because we've entered this phase of optimism. Parag bhai, just quickly, we know that you had mentioned that you might actually go ahead and take some profits off the table, then you turn constructive as well. At the current point of time, after a bit of a rally, are you constructive to put in more money to work? What are the cash levels?
So we are maintaining our 6-7% cash in the portfolio only.
6-7%. But you're deploying it now.
And booking profits where there is overheated markets. And buying some, for example, we have added significant exposure to financials now.
Yeah.
Because now we are constructive on economy because of this GST cuts and repo rate cuts and all. Plus, last 15 days, I have seen one data where personal loan NPAs are actually stabilizing. Credit card delinquencies are reducing, and MFI is also gradually coming up on in terms of recovery. So I would say it is gradual, but I would say that it is time to be constructive on financials as a second order impact of all this what government and RBI has done to drive growth.
Or Motamoti markets, you are constructive.
Yeah, I am constructive, and as I said, after 8 days of winning streak, you can lose a little bit, but that should be used as a buying opportunity.
Okay. Now, Kush, in this construct, what are the stocks that you're recommending for this morning?
Awesome. So as the Monday mornings go, I've got the weekly pick, which is Axis Cades. Now, mind you, this has been on my radar for some time. It's just that I could not initiate a call because the run-up was too high, too fast. But with a very healthy pullback over the last couple of weeks, and the stock beautifully retracing from that 50% Fibonacci support level, and now also seeing more traction in terms of volumes. I think Axis Cades is a good buy even at the current levels. So 1650, 1720 are your targets on the upside. 1515 is where you place that stop loss. Parag bhai mentioned financials. I don't know if Shriram Finance is on his list. It's on mine. A very good move in the last week. In fact, the last 2 sessions, which is Thursday and Friday, the stock ran up on the back of very good volumes and ended at the high point of the day on Friday. So I think this momentum could well continue. It's an FNO as well. So if you want to consider a trade on Shriram Finance, 645, 666 are your target. 620 is where you place that stop loss. Just a couple of points I want to mention before I hand over back to you guys. GMDC is one stock that we had discussed as a weekly pick last month, has been doing phenomenally well. I don't see any reason for you to exit if you held it at much lower levels of about 450 thereabouts from where we spoke. Partial profit booking makes sense, but don't let go of that stop. And similar views on Kaplan Point, which was also a weekly pick and has been holding steady and in fact gaining ground, now close to that second target of 2300. And one last point is on Wix, a very important one. It's been consolidating and now it's very close to that 10 level. Historically, this has been a very strong support level for Wix. mind you, one thing, so just for an example, mid 2023, VIX stayed in the 12 to 10 band for good 6 months, 7 months before it spiked out, right? But if VIX were a stock, I think this would be an excellent point from a RRR, risk reward ratio perspective, to actually go long. I'm not saying that a spike is immediately around the corner, but it's something that you have to keep on your radar for the next couple of weeks at least.
Okay. I'm just wondering if any of you are looking at Infosys in a bit more detail and if you have a view there. I'm just saying that because the...
Parag Thakkar is smiling.
is smiling. Okay, let me just lay out the premise of the debate first. The debate is thus: Infosys buyback, everyone's very excited. Who doesn't want dividend? And, company wants to share cash. But the other side of the story is that the street has not reacted to it too well, saying that you should have used that cash to, actually grow and to invest in technologies where you're behind right now. Just wanted to know where you guys are on this debate or on this side of it. Parag, is it as simple as to say, I mean, the cash is coming? As an investor, I'm happy.
Yeah, so basically, I would leave on to company to decide. I would not be judgmental. That I know better utilization of cash than Infosys CEO. Okay,
when you're buying a stock, you can be judge, jury, and executioner. That's the beauty of being a stock market investor. It's like the guy who buys a movie ticket and goes to watch a movie. You know better than the director.
Wipro bought a company which is into electronics, right? By paying $375 million. So I think our Indian IT companies will do whatever is required. They have always done it in the past and they'll do it in the future. I don't know why it is so much. This time, the social media and all this is so the narrative builds up so quickly that the company paying out 18,000 crore is also seen as negative. I am not in that camp, but of course I have to accept it that this time the narrative is too strong and the headwinds are too difficult to navigate through.
So some pain may be. Very quick technical view.
Oh, I think this is a buy. Even from a positional standpoint, this is a buy. The 50-day moving average being taken out, on Friday, it was hovering around that time, around that level for some time. I think 1555, and once that is taken out, 1580 also very much on the cards. And on the downside, 1490, the 20-day moving average, will act as a support. So yes, if you have a position, continue to hold. If not, you could still create a long position on Infosys.
I just quickly want to talk about one more space, and there's a note out there, I think it's Jeffrey's note, and Neeraj referred to it earlier as well, which is cables and wires. So there are channel checks telling them that there has been an increase in prices, which has been already taken. They're seeing up to 150 basis point upside in revenues for some of those companies. Is this a space that is now waiting for a breakout, Parag bhai?
Maybe, yeah, because see, on one hand, cables and wire segment has not seen any GST cut. So I was always constructive on Havells. We have discussed it earlier also and continue to hold it, and I would be a buyer on dips on that particular stock in cable and wire space, because I think that is a major beneficiary of the entire this GST cut thing, because if people are left with more disposable income, definitely they are going to spend on one or the other consumer durable item, and Havells is present in most of the consumer durable like AC and fans and everything. So I think it's a good company. Stock has not done anything since long. I would keep that under close watch and would be a buyer on dips.
By the way, that same note that Tamanna was referring to, Parag bhai, also speaks about stable PVC prices quarter on quarter.
Absolutely.
Will help pipes restocking and margins, and therefore they estimate that Supreme and Astral's Q2 operating margins could rise 100 basis points. Now we know that you've spoken constructively about Astral in the past. Are you a buyer in these pipe companies, Astral, Supreme, Prince Pipes?
Yeah. So basically, I have bought into Astral. It is part of my core position, and which I would like to hold on, because I think that restocking cycle, because of PVC prices stabilizing and moving up, has started. And so I think volumes will also pick up, and so I think the earnings has bottomed out in my view.
But the valuations don't deter you. Astral is very expensive.
So basically, like cement in January, when earnings are at bottom, valuations always look expensive. So this is a bottom of the earning cycle stock.
Any of these companies on your radar? The cables, wires, and of course the pipes?
The cable ones look more interesting to me. The KEIs and the polycaps of the world, yes, polycap perhaps could see some consolidation because then there's some exhaustion, but KEI is still building on in terms of volumes and in terms of price action. I think 4,200, 4,275 very much on the cards for this one. And on the downside, you've got supports near the 4,050 mark. So I think KEI, and on declines, polycap as well.
But you go long on KEI today?
Yeah,
you
go long on KEI. Yeah.
Okay,
yes.
fine. Okay. So that's, well, some indication, but viewers, we discussed that thing threadbare as well. Very active stocks currently benefit from all this consumption boost, etc. So keep an eye out. Now, what may benefit are Indian pharma companies. There is a policy change in the US. Now, don't smile at it because we know there are too many policy changes. But the key thing is the much discussed Biosecure Act, and you remember 2024 and how much it was in focus before the Senate blocked it. Now it is coming back under discussion, which essentially blocks, well, at least back then blocked Chinese majors from the US markets. Now, maybe there is a change there. But the question only is, what are the details of this new Biosecure Act? Varsha joins in with the same. Varsha, give us your detailed research.
Yeah, thank you for that. As you rightly said, past couple of months, if you see pharma gain mainly, because of Biosecure Act, but then Senate's blocked it, and now it's backed, of course, with a revised version. Now, just for the benefit of the viewers, what is Biosecure Act? This is a US law proposed to, ban certain Chinese companies. Well, this is because they consider this as a security risk. Now, onto the timelines, let's see what were the timelines. First, it was introduced in Jan 2024. Then it was passed by House in September 2024. And on December 9th, it was blocked by Senate. And now, in August 2025, now it is back with, of course, revision. Now, when I say this is back with revision, let's see what was the old version and what's the new version. In the old version, if you see, the bill was barring certain Chinese companies like BGI, Wuxi Aptech and Wuxi Bio, while in the new bill, they're going to refer to official list of companies which will be updated annually, and currently no Wuxi companies have been included, and this will be updated annually. On to the major beneficiaries when it comes to Indian pharma companies, all the CDMO companies will be actually benefited from this. You have Divi's Lab, you have Laurus Lab, Syngene International, Suven and Jubilant Pharmova. All these CDMO companies will be actually key beneficiaries when it comes to Biosecure Act. How India will be, or rather Indian pharma companies will be benefited from this, because the US companies will actually diversify their supply chain from China to Indian companies, and a lot of Indian pharma companies, like you talk about Syngene, you talk about Laurus Lab, they actually said in their con call that they are seeing their increase in proposals when it comes to US pharma. Now, let's see what are the commentaries given by Indian CDMO companies when the bill was introduced. Like Laurus Lab has been positive in their con call when it comes to US Biosecure Act. Even Syngene International and Divi's Lab and Newland Lab were also positive in their con calls, citing the reasons that US pharma have been looking to Indian CDMO companies when it comes to CDMO projects, because they want to diversify from China, and they don't want to depend on China when it comes to contract manufacturing. Lastly, talking about how the share price have reacted when the bill was proposed, from Jan 25 to December 2024. You see, all the CDMO companies have reacted positively, giving returns from 36% to almost 200%. While on 9th December, when the Senate blocked this bill, all the CDMO companies have given a negative returns on a single day. You see, Divi's Lab was down 2%, Newland Labs was down almost 6 to 7%, while Piramal Pharma was down 7%. So we know that this US Biosecure Act will actually benefit Indian CDMO companies, and now because it is back with the revised version, we may see more benefit when it comes to Indian CDMO companies.
Okay, thank you, Varsha, and very well explained on what the impact is of the new Biosecure Act. I think this is crucial because before the US election, this was something we were speaking about as a factor for Indian companies. Do you see any clear winners here from the Indian pharma space, Parag bhai?
Yeah, so basically it's a very long-term and very strategic kind of opportunity. So any buyer of this, and I would also love to buy, say, Divi's or Cohen's, for example, in this space. The only problem is that coming 1 or 2 quarters might not see any significant jump in profits, and the valuations are little bit on the stretch side, little bit stretched, I would say. So I am waiting for any dip to be bought into Divi's and Cohen's kind of stocks, because Divi's has of course proved itself, and Cohen's is, I think, trying to prove itself, and they have set up the target for 2030, which are closer to today's Divi's. So if you go by that, the market cap can be 3x of what it is right now in 5 years. But let's see, it's all upon execution. But I would say that these companies are fairly expensive. That is the only problem, and coming 1 or 2 quarters might not see such a big jump in profit. The long-term opportunity is phenomenal.
Yeah, but viewers, just keep in mind, there's a data around that Senate blocked this on December 9th, 2024. Since then, if you look at the returns from some of these businesses, except for Laurus Labs, which has given 56% returns, from a Divi's to a Piramal to Syngene to Newland, whatever, the returns have been very, very, very basic. So, no, yeah, so no, this is the response until then. I've given data for what happened post December 9th until now, and there you will see that Laurus is the only one which has given positive returns. Everything else has been lackluster. So there is a case for some price performance if indeed this sees the lights of day. So keep that in mind.
Parag bhai, if you want to have a decent play on the dual factors, one of GST cuts which will come into place say September 22nd onwards, maybe you will see the full force of the consumer push coming in. Where would that lie? And add that to tariff wars easing. What is the top 4 or 5 stocks in that model portfolio looking like?
Good question, very good question. So I would say that I will put financials in that, because one, the GST cut will drive demand, right? It will spur consumption. And so all the financials who are lending to start with Bajaj Finance, for example, but Bajaj Finance is a discovered stock. It has rallied a lot after the GST cut announcement. So I would not buy that. But instead, I would look at HDFC Bank, which has not rallied, SBI, which has not rallied, and there are a lot of positives which are coming for SBI every day, I think. And it is getting ignored right now because of this tariff overhang in the market. And SBI, remember, lends to, it is 25% of the lending in the system. So definitely once tariff is reduced and there's a little bit lesser stress on MSME, SME, SBI tends to benefit.
Got it.
So HDFC Bank, SBI, ICICI, as I've discussed last time, City Union Bank, and one another stock, of course, with a disclaimer that one should invest from long-term perspective only and take help of financial advisors, Piramal Enterprise. That is a very interesting stock, trading at below book value, 0.9x, and likely to grow at 30%. The growth book, which is around 80,000 crore loan book, is going to grow at 30%. So it will double by FY28. And ROA very naturally is moving from 1.5% to 3%, just due to operating leverage and their fee income going up, and little bit of help from cost of funds reducing. So I would say that this is a company where you'll see profits going up 3 times from FY25 to FY28. FY26, in fact, the PAT is expected to be 1,300 crores, which is 3x of last year. So this is a company where you can see your market cap can double or triple in next 3 years.
Wow.
If the economy holds on, which I think will hold on because of the steps taken by government and RBI.
You are saying, Parag bhai, just so that our viewers get it right, 3x profit
by
in
FY28.
3 years. In 3 years, right?
Yes.
So 3x FY25's profit in FY28.
26, in fact, 25 was only 485 crores. 26 is likely to be 1,300 crores. First quarter already was 275 crores.
Sure, so 1,300 in FY26.
And it is going to 3,500 to 4,000 by FY28.
Profits.
Yes, profits.
Wow.
And market cap is only 24,700 crores and net worth is 27,000 crores. So already it is below book value.
Meanwhile, let me go across to Harsh for the big brokerage call this morning. Harsh, what are we talking about?
Yes, it's all about IT, right? We've had a fabulous week where IT is concerned, and UBS has initiated coverage on some of the mid and small cap names, or rather mid cap names. Let me be specific. Persistent, they see a 24% upside here. Outside of that, they also see upside on LTI Mindtree, 16%, and UBS on Infosys, which is a 9% upside. On LTI Mindtree and Infosys, let me take that out of the way. They believe with regard to LTI Mindtree, revenue and margin recovery is going to hold the key, and that's where they see a 16% upside. Valuation, though, leaves little room for upside is what they say. On an Emphasis, they've initiated with a buy. They're saying that it's turning a corner after a few tough years. Again, here, a mid-teens kind of an upside is what they see. Let me talk about Persistent now, because that's the big one, near 25% upside. They're saying strong execution, and it's the fastest growing IT company, FY 20 to 25. There's been market share gains, which is a positive. Plus, you've seen margins go up 600 basis points over the last 5 financial years. So you've seen consistent improvement with regard to its metrics. Now, when you're looking at all of this and you're putting it all together, of course, GenAI is a risk, but they believe that Persistent is best placed there. And they're saying higher exposure to tech and BFSI, fascinatingly, plus US exposure at 81% of top line is actually a positive. So, kind of rounding it off, trying to talk about valuations, 44 times 1 year forward is what this one trades at. And they believe that this is reasonable, just about a single-digit premium to its 5-year average. But what they are saying is standing out is the fact that there could be possible upsides, both in revenue as well as margins, which could surprise investors on the upside, which is why that near 25% upside in terms of target price is what they see.
Okay, so Persistent Systems, among them LTI, Mindtree, all of them mild today, not doing much in the pre-open session, nor are the markets actually in the pre-open session. But IT, you think another leg coming on, Parag bhai?
So basically, frankly speaking, I'm waiting for, because I'm hearing a lot of contra opinions on here, because one is that TCS made that comments that AI application will increase the revenue opportunity for Indian IT services, while on the other hand there are various comments that it is deflationary because you don't have to hire people, so you will have to pass on the productivity gains to your customers. So a little bit confusion over there, but I would like to stick to large cap names over here because there is a confusion in the narrative. So I would like to stick to large cap names. Of course, Emphasis benefits from lower interest rates because a large portion of their business is with BFSI, especially to mortgage related BFSI. And if the rates are cut in US, which is expected on 17th, then definitely Emphasis will benefit amongst the mid cap names.
Any IT names that you would look at this point? You said Infosys is a buy.
Yeah. So actually, first I agree with Parag bhai that the tides shifted a little, where the small and the mid ones were actually doing well, but now the favor shifted towards the large names. So Infosys, perhaps even TCS, I think it also has to do with an element of margin of safety. So I would stick to the large names, but among the smaller ones, LTI, Mindtree, this one stands out. It's had a long phase of consolidation. Over the last couple of sessions, you've seen a golden crossover and the stock cross above and sustain above the 200-day moving average as well. The only reason we don't, or rather I don't prefer these right now is because the momentum's missing. But if I were to pick one among the smaller names, it would actually be LTI, Mindtree.
Yeah. Interesting. Technically, just keep in mind, LTI, Mindtree was an index stock until a few months ago, so it's not that small per se, but I get it. What Kush is trying to say is the non-Nifty names, if he were to look at it, then maybe LTI, Mindtree features in that list of stocks to buy into. Well, certainly watch out for that. What else? If you just look at the pre-open rates and what is doing well, by the way, Piramal is doing well, so bear that in mind. The stocks are kind of quiet. I mean, just absolutely flat for almost everything under the sun. Vedanta has a bit of a solution reached, right? Resolution reached on a verdict and on a dispute, and maybe a lot of people fundamentally believing that might not be a bad idea per se, because ALM, zinc, silver prices are stable and higher versus the last 6 months. And therefore, that might give a bit of a support. Kush, Bohra, does it show on the charts?
Ever so marginally, because there is a zone 455 to about 460 where there is resistance. However, the recent swing high late August was close to the 452 mark. The stocks sustained above that. The opening also seems to be opening above that level. Volume on Friday, very interesting. So I would definitely keep it on my radar. I wouldn't issue a fresh buy because of the near-term resistances that the stock is staring at. But if I had a position, I would continue to hold. I would keep a stop loss near the 450, 452 zone and continue to hold. Fresh longs once 460 resistance is taken out.
Okay. Parag bhai, you've been constructive metals per se. What about a metal name today? Do you?
So I would not like to comment specifically on Vedanta.
No, leave Vedanta
I have
out.
always liked Hindalco, which I have always said. And aluminium prices, mind you, on LME are right now closer to $2690, which is, I think, 2-3 month high. And so probably the results for this quarter should look good for any upstream aluminium company, which is Hindalco and Vedanta only. So I would say that, or in fact Nalco also. So I would say that yes, I am constructive in this space, and but as I said, I am more constructive on Hindalco, Tata Steel kind of, and also JSW Steel.
And also JSW Steel. Okay, Hindalco, Tata Steel, JSW Steel. That's a list of stocks which is interesting. By the way, there seems to be some fervor in telecom for sure. I mean, Vodafone seen some serious buying in the last few days, and I wonder if on the charts you would find some possibility of buying into a Vodafone or a Bharti Airtel. Kush, Bohra.
I would always prefer Bharti over Vodafone, but as far as levels go, Vodafone from a near-term perspective, yes, has done well in the sense that the jump up, from those 6.5 levels to 7.75 where it is supposed to be opening at currently, rather well backed with good volumes. 200 moving average also being taken out. So yes, this momentum could continue to about 8 and 8.35, but as I said, I always prefer Bharti over, or maybe even Industars for that matter, over Vodafone.
I'm just wondering in terms of some of your big movers. Let's talk about GMR, Radico, Khaitan. Just wanted to see them because I thought it's interesting that in the consumption names that Jeffries talks about, they talk about some of these plays as well. Radico, Khaitan, United Spirits is something we should look at as well. All of them upticking in the green. As we get also towards the festive season, etc., towards the end of the year, is this the kind of premium discretionary spend that you would look at, Parag bhai?
So basically, as I told you, I have auto names, Havells kind of names, auto components, some of the auto component names to play this entire GST recovery. And now I think it is time to move on and think about second order impacts, and that is where I'll end up in financials. So I would play it that way. So for example, if you just see, HDFC Bank is the largest auto financer, right? If you are seeing 10% growth in Maruti small car sales and 20% growth, what Maruti has said, right? Mahindra is saying above 15% growth in sales. HDFC Bank will also definitely benefit, and now their CD ratio is down, so now they can lend. And they already have huge presence in tier 2, tier 3 towns in all auto dealerships. Same is the case with consumer durables. So market is seeing only one side of it, that Bajaj Finance will benefit, but HDFC Bank is there in all the auto dealer shops, and it is trading at 2 times book value only.
Parag bhai, just keep in mind Anantraj and some of the others, because data centers, there are some big policy benefits that have come in for data centers, which could actually help this set of stocks do really well for themselves. So what's come in apparently is that the government has proposed a tax exemption of up to 20 years for data center developers, provided they meet some targets on capacity addition, power usage effectiveness, employment generation, etc. So bear all of these things in mind. A lot of unlisted and listed companies feature in this list of beneficiaries. The one listed name that I can think of is Anantraj out there, 5% higher. Kush, Bohra, on the charts, Anantraj, and then of course your opening thoughts.
Anantraj, very interesting moves already within the first 5-6 minutes of opening. The volumes are clocking near the last 20 days average. The price action speaks for itself. This is a good breakout. I think this is here to stay. The momentum could take the stock to about 575, 590 levels. Then it hits the 200-day moving average, and then we see whether it crosses that or not. It hasn't done it for some time now. Stop loss on this one, close to the 545, 550 zone. But yeah, this is a good breakout. As far as the market goes, Nifty a little soft is not a concern. What is heartening to see is the bank Nifty in green. Now, if the bank Nifty remains in green, I can bet all of 10 rupees that the FI short covering will continue. That is what the data has shown. They've been heavily short on the bank Nifty. If this stays positive and moves higher, the FI short covering will continue, and that will support the markets. So yes, that's a good sign. One pocket, and incidentally, I was ready for the opening stock of the day. We just kind of missed it. From the defense pack, data patterns could break out in the last couple of sessions. Today also opened well, sustaining well. I think now the risk-reward ratio and the momentum, both factors going for the defense pack. If you want to pick anything, BEL, HAL and data patterns. These are the three stocks that are on my radar from a positional standpoint.
Just to talk about the defense piece, and here's what's happened. On Saturday, an announcement has been made that the Defense Ministry will examine a proposal to procure 114 made in India Rafale fighter jets. The 2 lakh crore rupees is the total size of the procurement that will take place. 60% of it will be indigenous content, so it will be in collaboration with Dassault and Indian aerospace firms. I mean, it's interesting because of all of the hullabaloo around the Rafale, etc. 114 made in India Rafale jets will be procured, and that order will be examined, which is why you're seeing defense on a big move right now this morning. Of course, we'll have to drill down and see which of these actually could be beneficiaries to this specific fighter jet piece. But data patterns definitely seems to be one of them. Is defense looking interesting to you, Parag bhai?
So we have continuously held this view that HAL and BEL are the stocks which we will buy when defense flavor goes out of the fashion. So when people forget war and people...
But they were out of fashion for the last
so
4 months,
that's why we
right?
have bought HAL in that fall. Because, you know, defense is something which comes in and goes out, right? There's a flavor. When everything is, you know, when there is a war around and people are scared, suddenly defense comes back into full swing. So when it is out, we tend to buy HAL or BEL. That makes sense in our view. HAL has a high moat, 6-year order book, huge amount of net cash in the balance sheet. I think irreplicable business available at below 30x. So we love HAL and we love it when people hates it. So simple.
You were finishing your point when the market started, Parag bhai. Missing out on what it was, but if you want to finish your point.
On which...
Okay.
It was at that, I think, cables and wires and GST pack.
So GST pack, I told Tamanna that once this entire, auto components, consumer durables, all these things are done with, I think market will take a look that now financials are looking
HDFC Bank or Bajaj Finance in that
context.
I
have Piramal Enterprises.
HDFC Bank. I have bought HDFC Bank, SBI, ICICI, City Union and Piramal Enterprise.
Okay, so not Bajaj Finance. That's interesting because
Jefferies has added very fast.
Jefferies has added them specifically in the context of GST play. So Parag bhai, I think I know.
No, basically it is just a valuation. See, Piramal is Bajaj is a discovered stock with above 4 times book.
No one will say
Piramal is an undiscovered stock with below book.
Okay.
So that is the only thing.
Okay, and on your list in this context, financials that will benefit from GST spend. In terms of charts wise, what would be on your pecking order?
So broadly in the financial space, I like LTF. It has done phenomenally well. Now some signs of exhaustion, but any kind of dip, I'll take that as an opportunity to buy. Shriram Finance, we discussed this morning, slightly soft right now. But yes, I mean, even this is on my radar. I would consider this as well. Bajaj Finance, I completely agree. In fact, this was one of the stocks that I had shortlisted, but it's had, I think, 14 or 15 sessions of gains. Yeah. Deeply overheated, I mean, far overheated now. So maybe on declines, but right now, Bajaj Finance, perhaps, as a portfolio stock, continue to hold. Momentum play done for now.
Momentum play done for now. But remember, it had a big swift move sometime last week, Thursday or Friday, when it moved up 3%, if I'm not wrong. Amongst, of course, other moves that it has had. So, yep, certainly keep those stocks in mind. By the way, Parag bhai, maybe we spoke about it, maybe we didn't, but this whole KRBL thing, I don't know if you saw it.
I have not seen it actually.
Okay, the stock is down 10%.
But yeah, independent director resigning due to compliance reasons.
And many other
governance reasons.
Governance reasons. So 2.5 million shares traded, by the way, already, and the stock is down 10%, so bear that in mind. Some risks that come in with stuff like that, so just be careful. Okay, so one is what's happening to some of those names. I think there are individual pockets of strength, like we said, and naturally so individual pockets of weakness. But on the industrial side, which is not what we talk about quite often, after a long time, Kush Bohra, I'm seeing Ercon show a visible spike. Now, can we pull up that stock first? It's 5.5% higher on very strong volumes. What gives here? Any thoughts?
Very interesting moves on this one, and this was consolidating around the 20-day moving average for some time. This spurt is a very healthy sign. I think the resistance levels of 175 taken out. I would still wait because this is the first day in the last 7 sessions where it's given this kind of a spurt. 200-day moving average at 183, so very close to that level. If it does spike a little further from here, closes above that 200-day moving average, then it automatically becomes a very strong buy on technical grounds. So maybe give it one more day, see if the rally that it's seeing today in the opening session sustains. In any case, 176, 177, that zone which was a strong resistance level for the last 7 days, now acts as a support and a stop loss. So yes, if you have a position, continue to hold. Just a quick word on Axis Cades. It's already opened about 2.5% higher. Holding ground came very close to that 1650 target. So yes, I mean, if you haven't entered yet, I think it's giving you a good opportunity to enter now.
Okay, so that's your pick for the week. I recall Axis Cades. A quick word on RailTel. RailTel firing up this morning. They have received an LOA, letter of acceptance, for a 209 crore order from Bihar. From the Bihar Education Project Council for the implementation of quality enhancement in Bihar. Nevertheless, nearly 8% up on that stock. Is RailTel something that you look at, Parag bhai?
RailTel I have not looked at. I have not looked at railway sector stocks particularly.
Yeah,
but
I've never heard you. Why is that? Just curious.
I had looked at them when the prices were too low. So now I'm not able to, but of course we'll go through that. But as such, I am turning little bit more constructive on capex cycle also, as followed by financials. So financials is second order impact, and third order impact is of course capex also, private
because
sector
consumption
capex
will ensure
that.
that.
Consumption will ensure that. So anything, for example, we have recently added a stock called LG Equipment in our portfolio. It has fallen a lot. It's a great company, superb promoter. 40 times trailing for cap goods is okay. And compressors are, remember, used in every industry. Auto, FMCG, pharma, every industry this particular thing is used. So I would say that I'm, for the first time after a long time, actually I'm looking at cap goods space.
You are saying LG Equipment, the manufacturer of compressors.
Compressors, yeah.
Which is used in air conditioners where there is a dearth.
So yeah, they are, by the way, they are big suppliers to railways also.
Okay.
Okay.
Interesting.
Have either of you looked at the IPOs that are buzzing? Since we've none of them. Not Urban Company. There is the some of the other companies. Shri Mangal Sutra. I hope I've got the name correct.
I have not looked at it.
I hope I've got the name correct. No, it's a 60 times oversubscribed.
Sure,
you're staying away from all IPOs right now?
See, right now there's a lot of enthusiasm, there's a lot of liquidity. People are not making too much money in listed markets, so people are diverting towards unlisted and IPOs and all. But there's a lot of euphoria in my view. Let's see. I will not paint everything with the same brush. Of course, there might be good ones. But we'll look at them after they get listed.
Are there any platform companies that you've come into at all?
Just that. It's a difficult one to remember, of course, but it's actually Shringar House of Mangal Sutra.
Shringar
I wouldn't blame you.
Shringar
I'll forget it in 1 hour's time.
No, I stand corrected. It's companies raising money, Shringar House of Mangal Sutra, and there's a third one as well.
Dev Accelerator.
Dev Accelerators. So all of them in the primary market. The primary market is actually showing more action right now than cash markets.
So that is why cash market is to be a size is where you should be.
Is it where you should be?
Yeah, because here there is fear. Here there is fear of tariff getting reflected in stocks. Fear of earnings not coming back and valuations are being stretched, and those kind of narratives are there in listed markets. So that is keeping listed market muted, which gives us opportunity.
That is something that you have to keep in mind as well. Thank you so much, Parag bhai and Kush, for joining in on Monday morning, as you always do.